Charles Gasparino, here's the scoop. Federal Reserve officials getting increasingly worried about financial stability as opposed to inflation as higher rates begin to crush bonds. Several big investors tell me that the Fed growing worried about possible Lehman moment with a 4% federal fund rate as bonds and derivatives tied to them crash, given the enormous debt issued in just the past 3 years at super low rates. A Fed watcher told me the UK intervention was not a one-off and the same systemic risk could happen here, which might cause the Fed to pause. More later on Fox Business. Huge shout out to Charles Gasparino for staying up to date here with what matters most. The Ripple versus SEC lawsuit and then the inside scoop that's taking place here at the Federal Reserve, and these deals are so important. In my opinion, they are trying to keep this thing afloat. They are trying to keep this thing alive through this election cycle, but then it is over. It is over. Then they just, now it's time to really reset, demolish it, set off the final bomb, set off the final explosions, and they're not afraid to do more QE. See, here's the thing is they can continue to raise rates and then they can inject that stimulus, inject that liquidity into the markets to keep it afloat. That's actually what they're going to have to do. The other thing that helps them with that is then they can pay back that debt cheaper. So their debt service is the real problem at this point for governments and for corporations as well. And this is why the economy is not looking good. It looks like it's going to get much worse. But let's continue to watch that one unfold. Now, we do have an emergency Fed meeting announced for Monday. So not only are they worried about that systemic risk, they're actually scheduling a meeting here, emergency Fed meeting set to take place on Monday. That's going to be an interesting one.